Hi everybody, welcome back. This week we are continuing our Tax Basics series. So if you missed it last week, we did a short video about deciphering all of the different things on your pay stub, and we got some great questions, and those will be wrapped into the fourth video in this series, our question and answer video. So today we're going to talk about the tax return itself. What components are a part of it, how in general it works, and what the deadlines are and those sorts of things. Next week we're going to come back and look at how your withholding is calculated on your paychecks and how to estimate what your bottom line might be at the next tax time, and how to make some changes to have that come out the way that you would like it to come out. Next week we're also going to touch on gig work a little bit. And then week 4 will be that question and answer. So if you've got questions, please be sure to leave them as comments or drop us an email, and we will be sure to get those addressed. So for today, we are talking about the tax return itself. So we're going to focus on a 1040, the tax form that goes to the IRS. So this form, this filing, is required to be submitted to the IRS every year. The deadline is April 15th. There are some exceptions if you are in a federally declared disaster area. So if there is a tornado or a flood or something that is a federally declared disaster, there may be extensions of those deadlines. If you run out of time, can't get it done by April, you can file an extension, which gives you until October 15th. Just note that an extension gives you more time to do the filing, but if you owed, that tax was still due April 15th, even though you had an exception or an extension. So interest and penalties will continue to accrue from April 15th until you make that payment. So just be aware of that. You only need to file if you do have income. So if you are a student and you don't have any income for the year, you wouldn't have a filing requirement. So also keep in mind that we're talking very generally today, and there's always more information. So if you have specific questions, be sure to get those in. So the tax return itself, what gets filed with the IRS, looks like this at the end. If you're using software, it will ask you these questions. It probably won't show you the form until the end. So it asks you for your basics, your name and your mailing address and your social security number. It also asks this interesting question about the Presidential Election Campaign Fund. This does not cost you more money. It just says, hey, I'm paying tax and I would like $3 of my taxes that I have already paid to go to the Presidential Election Fund instead of the general tax fund. Those funds are supposed to help fund presidential campaigns evenly. So there's that. It doesn't, like I said, it doesn't cost you any more to check the box. There's no red flag against you if you don't check the box. So, but that's an interesting question. The next section is filing status. It's asking you if you're single or if you're married. If you're married, you're generally going to file jointly with your spouse, especially in a community property state like Washington State. But if you are filing separately, you still need your spouse's information, so you would still want to do that together. Head of household kicks in if you have a child and they live with you. Qualified surviving spouse kicks in, again, if you have a child and your spouse has passed away. So that's filing status. It's also important to note that if you are still being claimed as a dependent on your parents' return or on someone else's return, there is a checkbox to mark that you are a dependent. It doesn't ding you in most cases on your tax return these days, but it is important to not cause an issue for your parents' return. The next question is about digital assets. The IRS is really looking for people to accurately report if they have sold or received digital assets like NFTs, Bitcoin, other virtual currencies, those sorts of things. If you receive them as payment for something or as a prize, it's taxable. If you sell it, then that sale needs to be reported on your return, which may or may not have taxable profit. So those things are really important, and it's a segment that the IRS is really looking at. And then there's a dependent section. So if you do have a child or there is someone that you are supporting, you may be claiming them as a dependent. So now that we've gotten all of the heading information out of the way, the next section is income. So we're looking at income from all sources. The tax return only shows so many lines, but any income generally is going to be taxable income. If you win something, whether that's winnings at a casino or just a prize from somewhere, those things are taxable. There are very few things that are not. If you receive life insurance benefits or a gift from someone, those things are not taxable, but virtually everything else is. And so the tax return gives a number of lines to try to capture the most common types of income, which are wages, interest income, benefits from retirement accounts, capital gains, which are profit from the sale of stock usually or other property, and self-employment income, all of those sorts of things, all get listed on the tax return and all get added up. So one question we do get a lot is, if I have more than one employer, either you're working for multiple employers at the same time or you changed jobs during the year, all of those W-2s all get added up in your tax return filing for the year. You only file one form per year. So definitely make sure when you do file your tax return that you have everything before you file. So now that we've added up all of your income, the next part is adjustments, which can be things like, if you are a teacher, you can take a tax deduction for up to $300 in costs that you incur for your classroom. So if you're purchasing supplies and that sort of thing, there's a deduction for that. There's a deduction for student loan interest, so that may help you out. There aren't very many deductions in that section. The others have to do with putting money into retirement. So we take your income, we deduct some of those adjustments, and then we have what they call your adjusted gross income. That term shows up a lot. So the next thing is your standard deduction or itemized deductions. And we're just going to super briefly look at that. So if you are single for 2023, you get to deduct $13,850 from your income. You don't pay tax on that $13,850. If you have mortgage interest, property taxes, donations, and a few other things that add up to be more than that $13,850, then you would be itemizing your deductions. You would be doing a separate schedule that is totaling those things up. And usually that kicks in when you are paying mortgage interest. That's usually the main expense that can kind of kick you up over that $13,000. So for now, we're just going to assume we're taking that $13,850 deduction. That's bringing your income down further. Now that we have come down to your taxable income, that number gets the tax calculated. We're going to talk about that a little bit more next week when we look at a chart that shows the breakdown of how tax is calculated. So put a pin in that. We'll come back to it. For now, we've calculated tax. Whatever your tax is, we still have a little bit of an adjustment to do. There are some credits that are available. So if you are in school but are not a dependent on your parents' return, if you purchase an electric vehicle, if you have kids, there are some child-related credits. If you are low income and put into your employer's retirement plan or an IRA, there's a retirement savers credit. So those credits are dollar for dollar off of your tax. So if you have a $100 education credit, whatever your tax was, it's now $100 less. So we apply those credits, and then we have your final tax. So whatever your final tax is, that then gets compared to how much did you have withheld from your wages throughout the year. So whatever W-2s you have, that federal income tax withholding that was taken out throughout the year gets added up and compared to what your actual tax bill was. So if your tax bill was $1,000 and you had $1,500 in withholding throughout the year, then you've overpaid the IRS by about $500, and that's what you get back as a refund. If you have underpaid, if you've only paid in $750 throughout the year in withholding, you have to come up with the other $250 to pay the IRS to true that up. So hopefully that makes sense. The IRS will accept money through your withholding. They will also accept money by making estimated payments throughout the year. So if you are just self-employed, which again we're going to talk about more next week, you may be making payments yourself to the IRS throughout the year, and the same thing applies. However much you paid through the year gets compared to what your tax bill is, and that's how you figure out what your refund or your balance due is. So if you are due a refund, when you file your tax return, assuming you're filing it electronically, your refund should take anywhere from 7 to 21 days to arrive if you have requested direct deposit. If you've requested that they mail you a paper check, it's going to be at least a week longer, if not 2. You have to account for mailing time. There is a feature on the IRS's website called Where's My Refund that after you have filed, you can go there and click a link and see where it is in the process and what date they expect to direct deposit that refund. If you owe the IRS, you can go again to irs.gov and click Pay, schedule that payment to come out through a bank account. Don't pay it with a credit card. It's going to charge you 3% or so in fees if you want to use a card. But if you do it through a bank account, it's free. And when you go to do that, it will allow you to schedule the payment to come out on the deadline of April 15th. So you can file your taxes today and have it be done. Schedule that payment to come out on the deadline. You can schedule it to come out today as well if you want, but you can hang on to the money a little bit longer if you'd like. So how to file these tax returns? You can use TurboTax or H&R Block or one of the online software providers. You can go to irs.gov and click for free file information, which links you back out to those software providers. But the IRS does have a partnership with those software providers that if your income is within a certain threshold, that they will allow you to file your return for free through those platforms. If you don't live in Washington State and you live in a state that does have income tax, they may charge you fees for the state returns. State returns generally work pretty similarly to the federal, and they get filed together. You can also on irs.gov check and see if you're eligible for the new direct file pilot. This is the first year that the IRS has created its own filing platform, and it's allowing a very limited number at first with very limited circumstances to just file online directly with the IRS. You can also work with a tax professional. So you could go to a retail tax location like H&R Block or Liberty Tax or Jackson Hewitt. The benefit to those is that you can generally walk in or get an appointment pretty quickly. You generally don't end up working with the same person from year to year, though it's possible. But at least you have somebody to ask questions to in the filing process, but that is going to cost more than a software solution. You can also work with a tax professional like our office, depending on what that office is offering at the time. We are not currently doing one-off personal tax returns. But if you're going to work with a professional on a long-term basis, look for someone with a credential. They're either going to be an EA, which is enrolled agent, which is not an agent working for the IRS like it sounds like it is, but it is a credential that is administered by the IRS, or a CPA, which is sort of the credential everybody thinks about. or there is an accredited tax advisor or accredited tax professional. All of these credentials really just give you some comfort that the person you're working with has passed exams showing competency and are doing continuing education, because tax always changes and you want to know that the person you're working with is keeping up with the changes. The benefit to working with a tax professional long term is that they get to know you and can provide you more proactive advice. And the more complex your situation, the more that a tax professional makes sense. If you just have a W-2, doing direct file or doing free file makes the most sense. So hopefully this is helpful. What did I miss? Let me know what questions you have. Like I said, we're doing a Q&A session for week 4. So I really welcome those questions. I would really like to make sure your questions get answered. So I hope this has been helpful. I hope you have a fantastic week, and I will see you back next week. Bye.